If you're getting onto Medicare and your income is or was high, it can significantly impact the cost of your Part B and Part D premium. And most people have no idea about this until they get their letter in the mail saying that they have to pay significantly more than what the standard Part B premium is. So in this video, I'm going to go over what IRMAA is, how it affects your Part B and D premiums of Medicare, how ultimately Medicare decides what you owe, and how to avoid some common traps that you often catch people paying a higher monthly premium. For those new to the channel here, I'm Joseph Pate, better known as Medicare Joe, and every day we're working with high income earners that are getting onto Medicare, and we assist them through the process here so they can avoid big surprises in their Medicare costs. So I'm going to dive into the content today, and again, this is all related around IRMAA. So what is IRMAA? IRMAA stands for your income related monthly adjustment amount. Simply put, it's an added premium or an increase in premium to the standard Medicare premium that everybody pays because your income falls above a certain threshold. Now, this applies to Medicare Part B, your medical portion of Medicare, and Medicare Part D. It does not apply to a supplement or any other product, but it does still affect your total cost of getting onto Medicare because it affects those two parts. IRMAA is based off of your modified adjusted gross income from 2 years ago. So as an example, not to date this video, we're in 2026. If you looked at your 2024 tax return, they go based off of whatever that number is. So again, it's a 2-year look back because obviously you haven't filed taxes yet. So they go based off of what they have recorded, which is the 2024 tax return. Many of you may be saying that, well, my income is, now completely different than what it was back then. We get that all the time. In a separate video, I'm going to link it in the description below here. We're going to talk about how you can appeal if you've had a significant life-changing event. But this video, we're going to stick to what is IRMAA and how it actually affects your Medicare. So again, you don't need the exact number because we're going to go over the brackets that you fall into. But the main concept is the higher your income, the higher your Medicare premium is going to be. So if you can see here on the screen now, I've displayed the Part B charts, and it's very straightforward to see here. This is the chart to review, and again, these are 2026 figures. So if you're watching this video and we're in a different year, check the link below. It'll have the updated bracket for the year that we're in at that point. The standard premium for 2026 for Part B is $202.90 this year, okay? And in this first column, you're gonna notice it's for single tax filers. So you need to know what your modified adjusted gross income is, and you need to know if you're a single or joint tax filer, right? If you're married filing jointly, that's going to be in column 2. And if you look down the rows, that is going to give you the bracket of income that you fall into. So for example, if you are single between 109 and 137, then you're going to have an $81.20 monthly adjustment, which is the column 3 that tells you how much extra you're paying in premium. If you fall in between a joint filer at 342 and 410, you're going to pay an extra 324 on top of the standard premium. And if you look all the way to the right, that is the total monthly premium that you are going to pay. So if your income is below those first thresholds, there's no adjustment that happens. You just pay the $202.90. But based on whatever bracket you fall into, this column on the right shows you what your total Part B premium is going to be with the monthly adjustment in there. It's important to understand, guys, that this is not a one-time penalty, but it's something that applies to you every single month if your income is in that stated bracket. So that's how it affects Part B. The second way this makes your Medicare premium cost more is on the Part D side. So I'm going to share that bracket. Same thing here. These are the figures for 2026. The link below will have the updated years. But with Part D, it's going to work very similar. So you have in the left column here your single filer, and in the middle column you have your joint filer, and in the column to the right you have the income adjustment, the additional premium that you're going to pay on your Part D. Now with this bracket, there's no far right column saying what your total cost is, because this is the additional premium that you're going to pay on top of your Part D drug coverage. And that's going to be different for everybody depending on what type of prescription drug plan you pick or what type of Medicare Advantage plan that has Part D included that you pick. So this can just give you an idea of how much more you're going to be paying on top of the Part D premium that you end up picking. Again, it's important to understand this one key concept. The IRMAA follows your income. It does not follow your plan choice. Your plan choice has nothing to do with your additional premium. These additional premiums are going to happen to you just based on your income, not the type of plan you're selecting. So I want to shift to how a lot of high income retirees can get caught off guard. And this is like what I say, the one-time traps that we see happen to a lot of folks. So a lot of times, like I said, we speak with people that don't normally have a high income, but there was an event that happened. There was an event that happened, in that year that triggered a high income for that 1 year. Some examples, common triggers are like you sold property, you did Roth conversions, you had a lot of large capital gains that came through. Maybe you took distributions from your retirement accounts. Be mindful that that's going to go towards your total income and can put you in these higher income brackets for a year or sometimes several years if you keep doing them. So in this video, again, what to remember is that IRMAA is income-based. It increases your Part B and your Part D of Medicare. It's based on your tax return from 2 years ago. And higher income means you're going to have higher premiums in your total cost of Medicare. And lastly, the one-time income events that can happen, that can trigger, be mindful of them because they can push you into a higher tax bracket, higher income bracket that you actually cannot appeal. So again, this video was mainly meant to be educational so you can understand what IRMAA actually is. In a separate video that I'm going to link below, I'm going to go over how you can appeal the IRMAA if you've had what's called a qualifying life-changing event. So that'll be in the description below and pinned in the top comment for you to watch as well. And if you're on Medicare or about to be getting onto Medicare, you want to make sure you're going about this accurately, making the right choices, you're welcome to schedule a call with our team. We can walk you through your specific situation, give you accurate information to make this easier for you. If you like this video, please hit that like button. It'll help push our content out to more people just like yourself. And if you want more updates on Medicare, we post weekly on this channel. Click that subscribe button so you can be notified when we put new Medicare videos up for you. Thanks for watching.